Assalamu alaikum, ladies and gentlemen. Good afternoon, good evening. Thank you very much for joining in this very interesting, important topic, tax laws. These sessions on taxation, they come at a very appropriate time. So we're talking about a time when the world is surrounded by fears of spread of virus. We're all being bound to stay in our homes, and therefore the best time to look at our skill set, to try to upgrade the skill set. And I'm going to introduce the term marketable skills, and to possess some new marketable skills which you can market, and based on them you can go on and improve your earning potential. So very important skills. The first one is local taxes. And I think ACCA, with the help of MNP and Omar, they particularly looked at which ones of the tax laws should be discussed in detail, what detail, how this content to be passed on. And although this has been happening for quite a few years, we are looking at local taxes from a different perspective altogether once again. So very interesting series of webinars. They're all meant to equip you, once again, like I said, with more marketable skills. So all the best. Let me very quickly make a couple of announcements also. As you all know, you can ask questions by typing them in. It's a 2-hour session, so you will have about 15 minutes question answer break in between and at the end. So keep your questions focused. Only keep your questions relevant to the content that has already been delivered, right? As the trainer may have plans to deliver more content, and therefore automatically some of your questions may get answered. So just keep focused on the questions, on the content that has been delivered, and ask questions about that. These are going to be verifiable CPD units that you can gain as a result of attending this webinar live. However, if you attend the recording of this webinar on demand, that may count towards non-verifiable CPD units. As a result of attending this session live, you will receive certificates and you will be able to use them to claim verifiable CPD. Last but not the least, the presentation and the handouts to be used for today's discussion have already been uploaded. To look at your GoToWebinar menu, there is a section that says handouts, and against that it is saying 2 of 5. So there are 2 handouts uploaded. You can download them, and you can, alongside the trainer's screen, you can look at the presentation and the content yourself also. Umar Zahir Mead, the chairman of our members network panel, need no introduction. He's a very nicely embedded within the member fraternity of ACCA in Pakistan as well as outside of Pakistan. So I'll hand over to Umar Zahir Mead, who's our tax expert and champion and leader for this session. Umar, over to you.
Thank you, Harun. First of all, I would like to congratulate ACCA on introducing the CPD series, which is in line with ACCA's vision of equipping our members with all the relevant and timely skill sets. And as Harun has rightly said, the marketable skill sets. Before proceeding, I would like to welcome you all in today's session. So let's start with the first session of the series, that is TaxLaws Second Amendment Ordinance 2019. Bismillahirrahmanirrahim. Rabbash Ali Sadri wa Yassirli Amri wa Haluk Datim Lisani Yafkahu Qawli. O Allah, open my heart and ease my task for me, and remove the impediments from my speech so that they may understand what I say. Most of you would already be familiar with me. For those who are attending first of my sessions, this is my brief intro. I'll just quickly run through it. I'm basically a fellow chartered certified accountant. I also hold several other professional qualifications, including the CFA Charter, the Anti-Money Laundering and Fraud Risk Management specialization with 17 years plus fund of experience gained by working in top management positions abroad as well as in Pakistan. At the moment, I'm working as a managing partner at MLCC, which is honored to be the first ACCA practicing taxation and law firm in Pakistan. And I'm also sitting on the boards of several corporate entities as a director. With regard to trainings, I'm an experienced trainer, having worked with esteemed organizations in corporate, public, and academia sectors. My portfolio includes, but is not limited to, having conducted mandatory promotional trainings of government officers at MPDD, professional trainings at National Bank of Pakistan, HPL, MCB, PPCBL, Institute of Bankers Pakistan, in collaboration with the State Bank of Pakistan, Lahore, Karachi, Pakistan Taxpayers, Lahore, Karachi Chambers, Bahria, UET, and our very own, our alma mater, ACCA. For those of you who do like to read, I'm a regular contributor to various national and international English language publications on these different technical topics, such as publications such as Daily Nation, Times, Pakistan Today, Express Tribune, Blue Chip, etc. I'm also advisor to several parliamentarians and honored to have received ACC's Exceptional Public Value and National Advocacy Awards. I'm currently a life member, twice serving chairman, Finance Economic Affairs Liaison Committee, and four-time chairman of Liaison Committee of Lahore Tax Bar. I'm also honored to be representing Pakistan on the Global Tax Forum. As Harun has very kindly introduced, I'm also your chair of the MNP and Taxation Subcommittee. There are a few other associations, but I think that's enough about me. You have the intro. These are some of the existing clients associations and list of academic professional qualification and strengths. And this is something I'm very honored about. This is ACCA's report on MLCC. Now that this is done, let's begin the session with a professional acknowledgement. The presentation that you are about to see and have available for downloads is a result of several legislation and other reports, including those released by FPR and internal work of our firm, MLCC, on this subject. It's a professional courtesy to mention that these have been utilized in the preparation thereof. This is an extensive topic, and due to limited time and nature of the topic, we have strived to cover the maximum possible content within the available time. The content coverage, however, had to be prioritized and managed in order to suit the requirement and constraints of today's session. But one thing I can promise you is that you would definitely go richer in technical terms from today's session. One thing I would like your feedback on certainly is that we have had a discussion that these 2-hour sessions are perhaps optimal for your convenience, for the attention span. So do let us know what you think, whether these 2-hour sessions are the best suit, or do you think they can or should be extended to 3 or 4 hours, because ACC always values members' feedback, and we can take that into consideration when planning future sessions. So, TaxLaws Second Amendment Ordinance 2019. It was promulgated in last December, 26 December 2019 to be precise. And basically through this ordinance, amendments were made in Income Tax Ordinance 2001, the Sales Tax Act 1990, and the Customs Act 1969. So let's begin by covering the summary of key income tax ordinance changes introduced through the Tax Laws Second Amendment Ordinance 2019. First of all, an FPI, Foreign Portfolio Investment Scheme, uh, had a change. It now requires special convertible rupee account. We will explore a few of these things that we are discussing. The tax rate rationalization has been done with regard to the foreign investment. You might have been hearing about hot money a lot, the investment that was coming in government bonds. So some of the changes that we are discussing right now, in fact, all 4 of the changes on your screen right now in the income tax ordinance were largely focused on those, the investors who would be bringing in the hot money in Pakistan. So the tax rates have been rationalized for these investors. The rates have been reduced, changed, and the final tax regime has been introduced. So the rationalization was also done with regard to the withholding tax requirement. They are not now required, and this is a very interesting requirement change. They are not now required, these foreign investors or those participating in the FPI scheme, to register for NTN to become a filer. They would be treated as a filer. So this is a very interesting concept because as you are aware, even if you fall within one of the exempt categories but do want to have the benefits of a filer, you are required currently to file a tax return to come onto the active taxpayer list. However, a special change has been introduced by way of this ordinance, exempting those investors who would be investing in government issued treasuries, bonds, or otherwise in FPI. The idea was this, that these people who are living abroad perhaps have nothing to do with Pakistan or its economy and are coming as an investor, but they would be taxed at the higher rates and otherwise not get the incentives and benefits, and might be charged higher on the locally open bank accounts if they are to open that and all that. So that would de-incentivize them. So how then it was discussed, how can we address these shortcomings in our existing laws and regulations? So keeping in view of that, this change was introduced. Relief from higher rates for this is a natural exemption, but it's good to specifically mention here. You must already be aware of Section 236p, which introduced taxes on the banking transactions. So these investors, these participants of FPI, were exempted from the Section 236p levies, uh, as they would not be required to become a filer per se by going through the NTN registration process. They are not subject to 236p. So they would not be levied the higher tax rates, be it through the banking channels or be it through the withholding regime. So all that was rationalized to encourage the investment, and the result we did see that the investors were actually encouraged. So let's move on to an area of changes which has been the most discussed about in the professional circles and certainly raised the most queries and interests in our business circles. Okay, so some particular changes have been introduced targeting a particular business sector, which is referred to as the traders. Now, forget what you think about traders generally. You might think somebody who is selling anything, even my street shop, is a trader. Generally speaking, you might be correct. Of course, they are trading, they are a trader. But for tax purposes, and more so specifically for this ordinance purposes, not exactly so. Trader has been specifically described. So, a trader in the context of this ordinance is an individual engaged in the business of buying and selling the goods, the keyword, in the same state. So you can't do any ad valorem. You can't change the state of the goods. If you do that, you'll move on to the other categories, more likely into a manufacturer category, etc. But then you won't be a trader anymore. So the first requirement is that an individual who is engaged in the business of buying and selling of goods in the same state, including a retailer and a wholesaler, but cash 22, not a distributor. Why? You'll be finding that out in due time here. So now we know a trader is someone who is engaged in the business of buying and selling of goods in the same state, and that includes only a retailer and wholesaler, but doesn't include a distributor. So for tax year 2020, the turnover tax, it's the technical term that's normally used to refer to the tax that is levied under Section 113 of the Income Tax Ordinance. Mostly professionals and even businessmen refer to it as the turnover tax. The reason why we have included the term here. Anyway, this tax is reduced to 0.5% instead of 1.5% for traders with turnover up to 100 million Pak rupees. So if your turnover is up to 10 crore Pak rupees, instead of paying 1.5%, you'll only be paying 0.5%. So that is a material relief for the traders, and in line with the long-standing demand that many traders used to say that our margins is about 2% or even less, and if the turnover tax is this much, it doesn't make sense. How can we do businesses? So there is a relief of sorts here in that regard. I mean, if you think about that, 1% for the highest benchmark of 100 million, that would come up to 1 million. So that is a material relief in taxation that's being allowed. However, this would be a minimum tax. Um, for this session, it has been assumed that you have a base knowledge, but since it's a vital concept, I will briefly elaborate. Of the three regimes of the normal, final, and minimum taxation regime, minimum taxation is somewhat in between. It says that the tax that you are paying is the minimum tax that you had to pay. Now you'll work out your liability at the end of the tax year, and if you have any additional liability, you'll pay that. But if the liability is less than this much had to be paid. In certain cases, the minimum tax is adjusted, however, it is not refunded. So only for those who are not aware of the concept. But to avail this relief of lower turnover tax introduced by the ordinance, the tax liability for tax year 2019 and 2020 should not be less than the tax liability of tax year 2018. So what they have done is they have incentivized for showing more of the actual sales. However, the business community does have a concern. They are saying, okay, fair enough. For 2019 and 2020 tax years, we are fine. We'll be reporting more tax and more liability than 2018. But this ordinance has only introduced this relief for 2019 and 20. What about beyond that? Although it can be implied that the intention is to continue this relief and scheme, but as this has not been written anywhere, there is no assurance. So the business community is in two minds per se about the continuity of the impact and the possibilities. For example, one particular consideration is just to avail the relief if the business has a higher turnover shown in 2019 and 20, and then the relief is withdrawn, then in 2021 they again might have to pay 1.5% or whatever the rate would be at that time. How would that work out? What would be done then? If the government decide not to extend this relief, or if there are any conditions by the monetary fund asking to withdraw this scheme even if it was introduced, then what? Would the traders be required to continue to pay that taxation, the higher tax rate on the higher turnovers that were declared? Because you do know that under the audit policies over the years, one of the key risk criteria, undisclosed albeit, has been whether the turnover was lesser than the previous years. So the traders normally have been very concerned to ensure that they can maintain a turnover level which is actually higher than the previous years to avoid the audit implications. So you can't look at this change in isolation. You have to remember other areas and connect the changes with them. So yeah, by the way, you can keep on writing any question at the end of any slide about that slide in the question answer box, because we have a limited time sphere. So if you write your question after every slide relating only to that slide, then when the question answer session is started, I can quickly open up the question, or I can ask Nizam to kindly read them to me and answer them to you. However, please try to limit your questions only to the screen that is being covered, because you might have a question about some further development that you are already aware of, but that has not yet been covered. I might be about to cover that in one of the next slides. Secondly, it might confuse the other participants because we have to take everyone together, and certainly not everyone would be on the same level. So if you are already aware, just treat it as a revision, bear in with us in the spirit, in the team spirit, to take everyone together. But do write your questions about every slide at the end of that in the question answer text box. So traders being individuals having turnover up to 100 million Pak rupee would now not need to deduct tax under section 153 while making payments against supply of goods, services, and contracts. So that is also a long-standing demand of many traders and small businesses. Section 153 requires the withholding deduction of taxation while making a payment. So the traders, in addition to the relief on the turnover tax, the tax that is levied under section 113 of the income tax ordinance, would also now not need to deduct the tax under section 153 of the income tax ordinance. However, there is a catch-22 situation here. With regard to this particular clause, it hasn't been mentioned that what would be the base year to calculate the 100 million. Try to understand the point I'm trying to make here. Traders have been exempt that if they have a turnover of 100 million, they won't need to deduct the tax under section 153. They also had the relief for section 113, but there it was specifically mentioned that for the tax liability relief, the tax liability should be based on tax year 2018. However, it hasn't been mentioned that which year should be used as the base year to calculate the 100 million. Now, common sense would suggest that it should be the last completed tax year, which should be tax year 2019 now, or when this was promulgated, it was tax year 2018. So which one would you take now, 18 or 19? And even if you were to imply that since this came into being, this ordinance was promulgated when tax year 2019 was ongoing, and as the tax year 2018 was the last completed tax year, hence it should be based on tax year 2018's turnover. Where is it written? You might be right that it implies that, but when you are talking about law, specifically taxation law, you can't go on hearsay, you can't go on common sense, you can't go on it implies that. It has to be written in black and white. The implication can only come from legal judgments, which happens only after the process has gone through the appellate forums. So as it stands right now, this has been an area of ambiguity. We have written to FPR about this, and hopefully they would clarify this with more details after this current ongoing COVID-19 situation is over. But this is one area of concern that as professional you should bear in mind, particularly when you are advising your clients or your employer. So now that slide is over. You can just write any questions you had about that slide. Let's move on to the next one and talk about exporters. So this tax law second amendment ordinance has introduced some changes for the exporters too. The supply of goods and services by yarn traders to the following registered taxpayer shall be subject to a withholding tax of 0.5%. So yarn traders supplying goods and services to textiles and articles thereof, leather and articles thereof, surgical goods, sports goods, and carpets. These five names should sound really familiar to you. Does it ring any bell? I'll just give you like 30 seconds. What do you think these five areas collectively are referred to? Let me give you a hint. There has been a regime for a long time for these five particular areas that we have just mentioned. If I'll say anything more, you would be able to answer that straight away. And I just want to see, okay, I am getting some right answers by Suhaib, in fact, not Shoaib. Suhaib, Sayyid Muhammad, Abdullah, Naeem, and yeah, both of you are right. So this used to be these used to be the sectors, the export-oriented sectors, which were given the relief, if you remember, for several years to promote the export. And there was a lot of controversy when the relief was withdrawn recently. Anyway, so now any yarn traders supplying goods and services to these five export-oriented sectors shall be subject to a withholding tax at the rate of 5%. Uh, those supplies would be subject to this withholding tax rate. So now that slide is over. So if you had any questions about that, please feel free to write in the question box. You are welcome, Sohaib. For tax year 2020, the turnover tax, again, the tax levied under section 113 is reduced to 0.5% for individual yarn traders too. So just like we spoke about this relief given to traders generally, it has specifically been mentioned for the yarn traders too. However, a clarification is made that the exemption from collection of advance tax on electricity consumption is available to taxpayers registered for sales tax as manufacturer or exporter of leather, sports, surgical, and textile related goods by removing reference to zero rating regime of sales tax as was contained in clause 66 of part 4 of the second schedule of income tax ordinance. Because of the withdrawal of the specific regime, uh, the remaining of this clause actually created a bit of ambiguity. So by way of this ordinance, that ambiguity has also been removed. This brings us to this slide, and after this slide I would be actually answering the questions that you have till this slide. So come on guys, start writing your questions, but that would be a shorter break for like 5 to 10 minutes. Then we'll again come back onto our main presentation in the interest of time. Then we'll try to have another shorter question answer break and then one at the end of the session. So section 214E has been introduced. This section basically empowers FPR to prescribe any procedure and condition to close the pending audits under section 214D, the now omitted section. I hope you guys would be aware of 214D. Anybody who is aware, please let me know. I just want to see whether you guys are aware. Farhan, is it more understandable now? Automated selection of, okay. Hafiz Faisal is saying, please explain briefly. Amna Sami's 214D was automatic selection of audit due to late filing. You are right, Amna. Many other people are also answering. Since we have limited time, I'll come back to this. Yes, 214D was basically introduced that any late filing of return would automatically fall in the audit arena. Now, what this did was that it added to the audit backlog hundreds of thousands of cases, lakhs of cases, and the pendency is still there. With FPR, there was a major issue of capacity. Um, they argue that they are understaffed and they are still adopting the technology, and the existing audit selection under the normal annual audit was enough for them to handle. By introducing 214D, although the intention behind it was somewhat a good one, to actually motivate, incentivize people by using the fear factor of audit to file the returns timely, but apparently it wasn't done in a phased manner. Instead of doing that stage wise, like first educating the people, then communicating this for a year or two, and then introducing this was introduced somewhat suddenly, and the result was that the culture, unfortunately, that we have of late filing resulted in, as usual, many people filing the returns late, and all of them by law were selected in the audit. Now FPR didn't had the capacity, and over the last I checked, more than 1 lakh of those cases were still pending. I'm not sure of the number at the moment. I would still again have to check that. I'll check that and try to share that on one of my social media accounts for you. So anyway, now that was a big challenge for FPR, how to close those cases. In between, a scheme was announced where people could pay a penalty charge or some small amount and close the cases, but only a small number of people availed that, and a large number of the cases were still pending. So now by way of 214E, FPR has been empowered to prescribe any procedure or condition to close this pendency so that their capacity can be freed to focus on broadening of the tax base and the other cases. Okay, I hope that answers this query, and let's move forward. So, exceptions to section 216 FMU. FMU, for those who are not aware, is the Financial Monitoring Unit, and this change basically ties up with our Pakistan's ongoing proceedings at the FATF, Financial Action Task Force, and the resultant changes. One of the changes required the FMU to be able to obtain the taxation information especially about the public servants from the FPR. And previously, FPR used to be a bit reluctant, saying that these are taxation data and you need to get a order from the court of law for us to be able to actually entertain you. So the change has now been made with regard to section 216. The exception has been introduced, allowing the FMU now to be able to obtain the necessary information about the about whatever they want from public servants, which includes FPR as well. This brings us to the last point on this slide, clause 72B part 4 of the second schedule of the Income Tax Ordinance 2001. This has been amended. Basically, this used to deal with the withholding taxes exemption certificate and their renewals. So all of you who have dealt with this would be aware that this formality was quite cumbersome and used to take a lot of time. It would normally eat up a few months, making the effectiveness less. And during those months, while the process was ongoing, the problem was that even the people who have applied timely would get it late and end up losing on two fronts. On the one front, they would pay higher taxes, uh, additional taxes, which they had to during the period when their case was in processing. And on the other side, those higher taxes were very difficult to get adjusted or obtain a refund against. So this is a rational measure that automatic approval of the application for renewal of the withholding exemption certificate for the import stage filed on IRIS is now introduced. In case no action is taken by the commissioner within the prescribed time period, it would be assumed that the approval has been granted. However, in the interests of fairness, the commissioner can still cancel and modify after due proceedings and hearing. So for example, you applied for the uh, um, uh, renewal of the withholding exemption certificate, and the commissioner didn't approve it by the due time, so it would be deemed approved. However, later on the commissioner got some information that you withheld, and that would imply that you shouldn't be given the certificate. Then they can issue you a notice, give you a chance of hearing. You'll come to that hearing, prove why they should not withdraw it, any answer to their queries, or otherwise any explanation. If you are right, then that's fine, your exemption would hold. If you are not right, then after the proceedings and hearing, the commissioner can cancel that. However, this still leaves one question, a very interesting one. Many of you would remember that there used to be similar procedures introduced about registrations or other processes, but the problem was that all these approvals and exemptions are issued in IRIS from commissioner's login. So unless this process is entirely automated out of commissioner's login, where at the end of the expiry period, the exemption certificate is issued, it remains to be seen how effective this change would actually be in practice. Because if the commissioner still has to log in and he doesn't log in to your application and allow that, how would the system do the automatic approval? There need to be a change in IRIS with regard to this for this good change to be actually practically positive and implementable. So now, before moving on to the next section, which is extremely important and deals with a business license scheme, which actually raised a lot of queries and somewhat to an extent even a controversy within the business segments, now is the time to take your questions. So let's take the questions. Khayyam, Nizam, are you there? Can you hear me?
I'm here, sir.
Okay, Nizam,
Yes,
let's start with the questions. So what we are going to do is we are going to focus on the questions, not any comments. And if somebody is praising, at the end, you can tell me their names and I'll just thank them all in one go. So let's focus on the question and the name, please.
Yeah, sure. The first question we have is from Mutib. He's asking base tax year for year 19 to 20. Will it be year 1819 or 1920?
Well, Mutib, I did discuss that in quite a bit of detail that this is an area, there is a lacuna here, it's open to interpretation. Common sense would imply that because this ordinance was issued during tax year 2019, when it was still ongoing during December 2019, the base year should be 2018. However, the ordinance did not clarify which year would serve as the base year, right? Now, in the absence of this clarification, it is open to interpretation. So what I would suggest is, if you have any client or your employer, before advising them, actually write to their relevant RTO, regional tax office, take the clarification from the relevant officer in writing so that you don't have any problem. Most likely they will also tell you the same, that the tax base year would be, in this scenario, tax year 2018, but since this is not clarified, you should obtain that in writing. Next one.
Okay, we have Zillahuma asking how much is the due time for commissioner to take action upon an application?
They have to respond to you within 60 days, 30 to 60. I've got
Okay,
a
we have
comment that the handouts were not downloading. I think it must be a problem with his system only.
uh, a link has been provided to them for this very
Okay.
purpose.
Okay, right.
Next question we have from Wasi Hussain: why FPR issues tax exemption certificate to companies?
Okay, since you have asked this question, I'll briefly answer that, but I would request that because the time is limited and we already have an extensive topic at hand, please try to focus on this session. You can send me these queries by way of email or social media later on. I would try my best to answer them, or we can have different session on these. Anyway, try to focus your question on this session that we are covering so it can benefit everyone. In order to answer your question very quickly, it's the entire tax system to incentivize certain industries and certain segments where the FPR, in line with government's policy, want the businesses to invest more or trade more or do more commercial activity and generate business opportunity. Exemptions are introduced, and in line with those legal guidelines, the legislation for exemptions, these exemption certificates are then awarded. Hope that answers your question. Next one.
Taha Askari asked, does the 0.5% turnover tax on 100 million apply to digital retailers and wholesalers as well?
Well, the trader has been defined. There hasn't been any particular reference to any difference for the digital ones. So if you meet all the other criteria, I would assume that it should apply to you. However, you have to be very careful when you are talking about a retailer, because most of the online setups are serving as wholesalers. They are dealing in huge bulk quantities. There are a few platforms who are providing their services to end consumer too, but they are a mixture of a wholesaler and trader. So the answer would really depend on your client or your employer and their exact model, whether they have an online model that is directly dealing with the end consumer and serving as a retailer, or is it a mix. Hope that answers your question. Next.
Amara Sheikh is questioning, suppose I have applied for the exemption certificate some 5 months ago and still I don't get any response from the commissioner. Now, assuming that I have been granted the exemption, I still need that order of grant refusal, uh, which is not appearing in IRIS.
What was the name of the person?
Amara Sheikh.
Amara, that's a very good question. And if you are the same Amara that I'm thinking you are, good to have you join the session here. Amara, I have actually discussed that this is a problem. Previously, this also happened that certain good changes were made, but IRIS, the actual system was not upgraded. So it remains to be seen. You are absolutely right. If it is not appearing in the IRIS, in the absence of the actual document. You can't just take the ordinance and show that, look, I applied and they didn't approve, so it is deemed approved. You would still need to follow up the commissioner's office, write to them that, look, you didn't grant me this within the prescribed time limit, and as per the law governing our professional relationship and your domain, it is now deemed approved. So kindly issue me the certificate or issue me a rejection. In the case of the latter, you can then challenge that at the appellate forum that the commissioner didn't approve within the time limit and should have either given a very concrete reason or should have issued me the certificate. So that would be the mechanism, and hopefully in due time they'll upgrade the IRS too. Hope that answers the question. Next one.
Suleiman Salim is asking, what about minimum tax requirement for loss-making company, 1.25% on turnover? Is it still applicable?
Well, again, that's an irrelevant question with regard to the minimum tax that we are talking in the context of TaxLaws Second Amendment Ordinance 2019. It doesn't matter whether you are loss making or not. You are paying the turnover tax on the turnover. Unfortunately, it can seem, how to put it, well, kind of unjust for loss-making businesses, but that's the law of the land. You have to comply with. I will briefly give you the background why this was introduced. You are aware that in Pakistan, unfortunately, our economy is not as much documented. Well, let's be frank, it's hardly documented. We know about the two sets of books, a very non-professional approach that's been done by many. We also know of no books at all. We also know about other activities. So keeping in lieu of all that, FPR came up with this proposal long ago when they got this introduced under section 113, that okay, if we are not getting the actual figures and numbers, this is the way we can perhaps get people to pay somewhat of their due liability. Now, the problem with such measures is that it ends up punishing those people who are genuine and on the receiving end, like loss-making institutions. And certainly we at ACCA, especially at the ACCA Taxation Committee, I can share in my capacity as the chair of the Taxation Committee, we continue to advocate rational changes in such policy. However, while we can debate about how just or unjust a particular policy is, unless that changes, that is the law of the land and we have to comply with it. Hope that answers the question. Next one.
Waqas Rafiq is asking 100 million per annum or per month for a trader.
That's a good question. And then we already mentioned that. That is actually annual. It will be coming on the next slide. You asked that beforehand. Anyway, that's the annual limit. Next one.
Muzaffar Ali Sheikh, does farmer manufacturer come under 0.5% turnover tax after this amendment?
If you fall within the exact definition of trader, then you would.
Okay, Muhammad Usman Ali, clause 72.
Aren't 10 minutes over yet? You have to keep an eye on the time too.
Yeah, we'll take this last question.
That is, you know, Nizam, that is the actual problem, especially in time constrained environment, that you start enjoying answering the questions so much you lose track of the time.
Okay, one question that has been repetitively asked, what is the definition of state here?
Provinces and different areas. You can't just say provinces because we also have federally administered areas. We also have the federal capital. We also have the provincially administered areas. And then we have special constitutional areas like Gilgit-Baltistan. So the state can perhaps be better defined as the federating units. So you can ask me one more question, then we'll go back to session. The main
okay, Ali Zubair is asking, will this amendment have any impact on zero-rated goods?
Well, not necessarily zero-rated goods per se, but it would definitely impact if you are a trader who falls in the category of these definitions and a part or majority or some part of your goods are zero rated, then definitely you are impacted. Not those items, definitely, not all of them, certainly, but you as a business would be impacted. So let's go back to the session and we'll continue after this next chunk of presentation to answer your questions from where we left off. Nizam, could you please mark the question we last answered and continue from there in the next Q&A?
Sure.
Okay, let's continue. So we left off, we were about to speak uh, for the next specific change, which is the business license scheme. So what this scheme prescribed was something very interesting. It actually suggested, we shouldn't even say suggested, now that the ordinance is promulgated, it ordained that whenever a person fails to obtain a business license under subsection 1, the commissioner may, in addition to and not in derogation of any punishment to which the person may be liable under this ordinance or any other law, impose a fine of 20,000 rupees in case of a person deriving income chargeable to tax under this ordinance, or 5,000 rupees in all other cases. This is only one thing, the penalty. That's not all. Commissioner can cancel the business license in cases where a person fails to notify the commissioner of any change in particulars within 30 days of change, or is convicted of any offense under any federal tax law. So this actually is very interesting and has a lot of ramifications. First of all the businesses would now be required under this scheme to obtain the business licenses. And this was actually a core point of agitation of the traders when they got some interim reliefs after this ordinance was promulgated. They had an argument that a lot of our businesses, especially from the SME sector, do not have the necessary human resource or the capacity, both in terms of the skilled resources at their disposal and the monetary investments in the business to comply with these requirements. The FPR, on the other hand, was of the point of view that this would actually help regulate and document the economy, as they believed that most of their other initiatives have failed. However, this was a point of contention, and previous to this ongoing situation, interim relief was given to businesses. Let's just talk a bit about what this scheme would mean in addition to the license being required. This would mean that if any trader under this business license scheme would have any adverse conviction under any other taxation law, then their business license can be cancelled. If they get conviction under any other federal tax law at all, so they can end up losing their business altogether. So that is quite a huge penalty. And you can argue that it serves as a motivation, the risk factor, but the state that we are at as a whole, in terms of the business community and the country, introducing such radical changes abruptly, one can argue might not be the wisest way. Perhaps we can look towards the other countries. We can look how the changes are introduced there. So if you talk about UK, a change is first debated, it comes on the media, people get to give their opinions on that. Then once the change is approved, good enough time, normally even years, are given for people to prepare. They are continuously educated, tax authorities educate them, and then it is implemented in a phased manner. And we are talking about societies with very high literacy rate, very high compliance, documented economies. So when we are talking about Pakistan, I think we need to take into account the local challenges. Anyway, since this has been promulgated, it's part of the law, and it remains to be seen that after this ongoing corona crisis is over, inshallah, what becomes of this particular business license scheme. But you need to be aware that this was promulgated and what it meant as a professional, so you can advise your employers or clientele. By the way, can you all hear me properly now? there was someone complaining about the voice before, so I'm just concerned that you all should be able to hear me properly. So if some of you can quickly give me your feedback whether you are able to hear. Yes, yes, no issues with voice. Yes, 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 yes. It's perfect. Okay, that's great. And okay, that's good. Okay, thank you guys. Thank you. We can go back to the presentation now. Another change that has been made in the income tax ordinance, and do not lose sight of what we are discussing within the tax laws second amendment ordinance 2019. We are at present discussing the changes introduced in the income tax ordinance. We will then move on to the changes introduced in the sales tax act. So with regard to the ITO, income tax ordinance abbreviation, greenfield industrial undertaking has been defined. We will see the definition in the coming slide, and retrospective applicability has been introduced from the beginning of the tax year 2020, 1st July 2019. Section 230E regarding transfer pricing audit cases has prescribed that the transfer pricing audit cases shall be conducted as per the existing procedure for the existing audit cases outlined in the section 177 of the income tax ordinance, and the commissioner can still determine the transfer price at arm's length in transactions between associates while conducting the audit under section 177 or 214C or during the proceedings under revised assessment with regard to section 122 of the income tax ordinance. So that's the end of the changes with regard to income tax ordinance. I think we can make time to take a 8 minutes questions break now. Nizam, are you ready?
Yes, sir.
Come on, let's do it.
Okay, Hafiz Salman is asking what type of business license required and from which
Salman, that's a
authority?
very good question. Basically, what was prescribed was the different categories and procedure that were to be described in details. And the idea was to have licenses for every area of business except for very small. So that would probably cover all the conceived different trading areas. However, as I mentioned, this went into agitation and a lot of controversy was derived out of it. So there was a temporary relief given, and we are still waiting for further details on this. Next one.
The Ijaz is asking a reference to business
Who is
license
asking?
scheme. Muhammad Ijaz.
Okay.
Reference to business license scheme. Change in particulars need more explanation, please.
Okay, Ijaz, as I've just mentioned, the details are too sketchy because these procedures and details were to be described in details, but due to the controversy, this was kind of suspended. Interim relief was given. So once the corona crisis is over, hopefully we'll get more details now. Khayam, Nizam, sorry, any more questions that we have with regard to the business license scheme? They can all be clubbed together and asked once. Okay, let's move on to the other questions now.
Okay, Faisal Aziz is asking, has the authority identified the schemes which shall be treated as greenfield industrial undertaking?
Yes, and we are about to
And then
discuss
we
that
have
in detail in the next slide. Next one.
trader having already NTN is also required to obtain license, question mark. Mohammed
Under the
Faisal.
scheme, they would be if this becomes effective. Next one.
So we were discussing amendments in tax laws, but to be honest, ACCA, we are not well versed in with Pakistani tax regime. Please advise how can we learn local tax laws?
Okay, who is this? Nizam, who's this? What's the name? Hello. Can you hear me?
Yes, can you hear me?
Yeah, I can hear you now. Can you say the name of the person who
This
asked the
is
question?
Wasi Hussain Kazmi.
Okay, Mr. Kazmi, Well, we have been doing taxation CPDs, and yes, I agree that there is an ongoing need to be conducting these sessions, and hence this series on taxation. We do have plans, and MNP has suggested to the ACC official team to conduct plan a series on the basic detailed taxation laws, which were covered a few years back. You can still go and see the recordings. The crux should largely be the same. There are some changes that have been introduced. Hopefully, we'll be covering them in due time. Um, I would suggest that the best place to start would be to see the recordings of those detailed sections. They are available on ACCA's previous YouTube channel, and currently they are available on the link that Haroon and Nizam would be sharing with you. And they are also available on my YouTube channel. We have detailed sessions of 24, even 30-hour session on the entire income tax ordinance, sales tax act, provincial sales tax act. Go through those recordings, especially now that you are in quarantine, you are in the lockdown and have more time. You can actually really work on your skills, then actually go through the legislation drafts after going through those sessions, or when you are going through those sessions. That would be a very good starting point. And then where you see that there are patches, there are any queries, you can ask those questions directly to me, or you can actually suggest a session on those areas which can then be more focused. I hope that answers your question, but try to focus the questions on the topic in hand, please, guys. Next one. We have 3 minutes left.
Is asking a brief explanation on arm's length.
Arm's length, basically, you should be aware of this. You have studied this in your ACCA studies. Arm's length mean the transaction between two totally unconnected parties. So the problem with transfer pricing, or with actually the group companies, is that they have an association, or the decision makers can even be the same. They can be largely the same, if not entirely the same. So there is a possibility that the transaction between them cannot actually be which they would do with totally unconnected parties. And that gives rise to tax implications. So for example, if I may be blunt in giving an example, you may be raising a sale invoice to an outside party at the market value. But when you are actually doing a sale to a group company, you might be tempted or instructed to bill them at a reduced rate. And because the decision makers would be giving you that instruction, you would be doing that. But the tax authorities would be concerned that this is not the arm's length value. So there is tax implication, there is implication for government's revenue, which they would be concerned about, and they would try to secure that. And hence the concept of arm's length transaction in the taxation laws. Next one.
It will be all for now. We can move on, sir.
All the questions are answered.
Pretty much, yes.
Okay. I think we got one more from Ali Zubair. Sir, in your opinion, do you think that this amendment will have any changes in the coming days before budget, considering the fact that the government is in the phase of finalizing relief packages and taxes as well? For example, the limit of cumulative utility bills of 0.12 million may be revoked, with any other a lot lesser amount. Ali, that's a very good question. Look, this COVID-19 is a global challenge. All the economies and countries of the world are right now fighting this pandemic. Same is the case in Pakistan. Um, what will happen in future is anybody's guess, but from my interaction with government officers, different parliamentarians, the regulators, this week is very important. The results of various things that are to come would decide which direction would we go. If the lockdown is extended, the schools, colleges, educational establishments are already closed till 31st May. If the general lockdown becomes worse or is extended to May or beyond to June, as is the case in several countries. More than a third of the countries in the world are under the lockdown. You might be aware of that, with many more in softer lockdowns and many more going towards that. If such is the scenario in Pakistan where this lockdown is extended, then I see that government's priority would not be enforcing the business license scheme. It might remain suspended. The focus would certainly be on the relief efforts, on reviving the economy, and certainly on fighting this pandemic. So with that, the time is up. We'll take your questions in the next Q&A break, inshallah. So let's go back to our presentation and the last 1 hour of our today's session. So far so good, guys. We are actually doing this session very well in a timely manner, covering the key areas. Hopefully we'll be able to do that till the end. So next up, the changes in the Key Sales Tax Act 1990. The key changes in the Sales Tax Act 1990, will go through their summary. The greenfield industry has been defined. The tier 1 retailer has been defined. Section 40D exempt areas are specifically prescribed. Supplies to unregistered persons have been mentioned. Relief on cell phones has been introduced. Sales tax on bricks has been addressed. The ad valorem tax relief has been given in the 12th schedule. Penalties have been imposed for 4 different scenarios, and then changes in the Customs Act, which are not today's purview. Okay, guys, so let's start this. Greenfield industry has been defined in Sales Tax Act. Remember, it has been defined in the Income Tax Ordinance, and since the concept is both in the Sales Tax Act and Income Tax Ordinance, the definition now helps address those reliefs. The definition was not today's purview, but you should go through the legislation we have provided you. The 2 files we have provided you today are number 1, a copy of this presentation that you are seeing, and number 2, the actual legislation, the actual ordinance, tax laws, second amendment ordinance 2019. So after this session, go through that, and any question or queries that you may have, you can send that to me over the social media. I am very active on LinkedIn for these professional queries, or you can send me a WhatsApp. If you do decide to do WhatsApp, do mention your name and you attended the session. However, best way to reach me is by LinkedIn. Anyway, coming back to this query, coming back to actually this point of greenfield, the definition is actually amended in a way that you would be found needing as to what would possibly be a greenfield industry, because you need to have a totally new project which wasn't done before, then it need to go through the engineering council, and then they need to agree with it, and then there are additional conditions. So most of the business fraternity and the professionals are of the opinion that the current definition definitely needs work to be done for it to be effective. Otherwise, the definition that has been introduced really curtails the scope of the greenfield industry and the resulting reliefs. Moving on to the tier 1 retailer. So this tax law second amendment ordinance introduced a lot of changes. However, the tier 1 retailer change is the one that was most discussed about. The definition of tier 1 retailer has been revised by way of this ordinance. Now, a tier 1 retailer is one who falls in any one or more of the categories contained in the said definition. The limit of the cumulative electricity bill for last 12 consecutive months for addition in tier 1 has been revised to 12 lakhs instead of the old 6 lakh. So this is a good initiative. Basically, these changes in tier 1 retailer definition were in line with the government's negotiation with the trader association. You must remember that initially when these different tiers were introduced and these changes were introduced, a countrywide strike was called by the traders, and there was a lot of agitation going on. Then FPR and then the relevant ministers went into negotiation with the traders, and few points were agreed, and those points, some of them, in fact most of them, were introduced by way of this ordinance. So keeping in view of that, the cumulative electricity bill limit for last 12 months was introduced revised from 6 lakh to 12 lakh. Now it has to be 12 lakh for one to be added within the tier 1. FBR has been empowered to prescribe any person or class of persons to be a tier 1 retailer. So what is the actual definition of tier 1 retailer that we referred to on the last slide? Tier 1 retailer means a retailer falling in any one or more of the following categories, namely a retailer operating as a unit of a national or international chain of stores. So for example, if you are a national chain of stores, I was about to take a name, then I thought I'm not sure whether it would be considered as branding of that retailer under ACC's guidelines, but we are all aware of several national chains. So any of those chains or any international chain of stores would be considered as a tier 1 retailer. A retailer operating in any air-conditioned shopping mall, plaza, or center, excluding the kiosks. Now this is very interesting because this means that if you are a store or if you are a retailer in an air-conditioned shopping mall, no matter how small you are, no matter whether you are a new entrant to the market, obviously subject to the other conditions being met, you would be treated as a tier 1 retailer. So you are not just talking about the national chain or international chain of stores. If you are operating in an air-conditioned shopping mall, you got it. You are tier 1. A retailer whose cumulative electricity bill during the immediately preceding 12 consecutive months exceed 1200,000. So we have already discussed about this change on the last slide, that the limit for the cumulative electricity bill has been increased from 600,000 to 1200,000 if your cumulative electricity bill for the last preceding immediate 12 months period, consecutive 12 months period, is 1200,000 or more. Congrats, you're a tier 1 retailer. I don't know whether how many would say this is a congrats in order or not. Depends on one's perspective, really. A wholesaler cum retailer engaged in bulk import and supply of consumer goods on wholesale basis to the retailers, as well as on retail basis to the general body of the consumers. So the ambiguity that was there, that whether somebody who would be engaged in both retail and wholesale would fall in this category or not, tier 1 retailer definition has clarified that if they fulfill the other conditions and they are doing this, they would still fall within the tier 1 retailer. A retailer whose shop measures 1,000 square feet in area or more. So if you have a shop of 1,000 square feet or more, uh, you're a tier 1 retailer. Any other person or class of persons as may be prescribed by board. This is normally the lingua of the legislation, the tax legislation that is introduced, because FPR has to work with the ongoing challenges. So normally they are, when a act is passed or the ordinance is passed, they are now being given these powers, because there was a judicial decree that required that there should be a parliamentary or the public representatives approval of any changes that FPR brings. So what they do now is, by introducing this clause that FPR can prescribe, they pre-approve those changes, hence addressing that legal lacuna which was introduced by the legal judgments. Anyway, that brings us to section 40D, goods from tax exempt areas. Before talking about this particular change, I would like to bring your attention to one largely known practice with regard to Afghan transit trade. Afghanistan is a landlocked area, we all know that, and Pakistan being the neighbor and in compliance with our agreements with Afghanistan and our international duty, we allow goods and services to be delivered to Afghanistan without any taxation. Pakistan do not charge taxes on that. The problem with that has been for a long period, that most of those, I wouldn't say most, many of those goods and services end up in Pakistan's market. So many different proposals were forwarded. Even we have proposed that there should be tracking of the consignment. There should be e-clearance at both the ports. The weight should be measured. There should be actual categorization, but obviously there are capacity issues. There's only so much you can do. So that's an area that needs to be addressed. However, a similar thing was starting to develop within the country with regard to sales tax. Remember, Sales Tax Act is governed by FBR, Federal Board of Revenue. However, there are tax exempt areas such as Azad Jammu and Kashmir. It has its own body. Gilgit Baltistan. It has its own body. The tribal areas as defined in Article 246 of the Constitution, and other areas that may be prescribed. So the problem was happening somewhat similar to the Afghan transit trade, and plus another issue that ACCA and we have uh, many times addressed in the tax harmonization, that there was an element of double taxation. So with regard to Section 40D, provisions relating to monitoring and control of these goods from tax exempt area into the rest of Pakistan have been introduced. So hopefully these measures can address many of these challenges, because remember, these challenges actually create problems for genuine businesses and also for the business ecosystem in Pakistan. So it is vital that these are addressed so that businesses can take the leap forward. Which brings us to the supplies to the unregistered person. You would be able to recall that previously we were allowed to deal with the unregistered person, and we would just have to pay an additional tax liability and be able to claim the input tax. Not anymore. What has changed? We'll come on to that in a bit, but it's time for another quick 10-15 minutes question break if our Nizam is ready. Hello.
Sure.
Nizam, you know, I really like this statement, if our Nizam is ready, for three reasons. Number one, it shows the terms of endearment, how much we value you, right? Number two,
Sure.
it it actually attracts your attention. And number three, it also has the meaning of our system. So let's begin. That was on a lighter note. You don't need to worry. Ask your questions.
Okay, and finally is asking, it may not be relevant, but can I ask regarding transfer pricing? Can the group company in foreign transfer profit and taxed on the
You
reduced
know what?
rate in
You know what?
Pakistan?
Hang on. Hold on to this question. Once we finish the session, in the last Q&A session, you can ask that. Okay? Just mark this question. Let's move on to the next one.
Okay, Zishan Majid, please guide all the businesses to get business license before they start.
Yeah, I think it sounds more like a suggestion, but yeah, you should wait till the scheme is actually implemented. Next.
Wasi Hussain is asking, supplies to tax exempted areas such as HIK and FATA are exempted from third schedule of taxes too? Question mark.
Well, as I've just covered this, you need to actually go through the relevant section of the ordinance that we have given you free of cost. You have that available. Go through that. Your question has been answered there. If you still have any query, shoot me a message on LinkedIn. Next one.
Muhammad Ali Khan is asking, is 0.5% WHT would be final tax? Is there
It
a
would
relief
be
for
the minimum
exporters to
tax.
promote?
It would be a minimum tax. Next.
Okay, is there a relief for exporters to promote exports?
Who is asking this?
Muhammad Ali Khan, he has question
Okay.
parts.
Ali, it depends on your perception, really. Most of the professionals and traders have been saying that with regard to this ordinance, no. Next.
Is 0.5, is there a relief for exporters to promote exports? Final tax, okay, it's done with. Ali Zubair is asking, okay, this is an old question. What about tracking services to logistic companies taking cargo to Afghan? Are they can be exempt from Sindh sale tax as good are exempted? As goods are exempted.
Not relevant, not today's topic. Next one. The question that you
Okay,
are
any more
reading,
questions?
Nizam, what is the time in front of them?
These are recent questions, sir.
Okay, go
This
ahead.
one is a recent question.
Okay.
Okay, any more questions? Yes, Murtaza is asking if we sell to unregistered person who is exempted to register under sales tax. In that case, input shall not be entitled to claim credit adjustment.
Murtaza, hold your horses. We are about to cover that on the next slide, my friend. Just hold on. Okay, I'll
Okay, any
take
more
it over from
questions?
here, Nizam. Let me just answer a few old questions which are left.
Sure.
Okay, let me just quickly. Taha Askari saying the business license schemes seem to be skewed for large corporates. How can the new businesses of SMA tackle with these with limited resources? Why doesn't the FPR promulgate this based on feedback from all sectors instead of one size fits all to document the economy? That's a good suggestion, Taha, and your taxation committee of MNP is advocating the same on your behalf. Don't worry about that. And has the authority identified a scheme? Okay. I think the handouts issue is already sorted, right?
Yes, a link has been provided to all of them.
Okay. Rashid is saying 2 hours are not sufficient. Please allocate appropriate time. Okay, please send your suggestions by email to members affairs. Do persons need to register under sales tax if individual is falling under 100 million limit? Hassan, that is not a limit for registering for sales tax. That is a limit for falling within the purview of the trader and getting the benefits that are being prescribed. So yeah, depending on your area, you might need to register for sales tax even if you fall under the 100 million limit. 100 lakh. Sir, will this amendment have any? Okay. What is the okay, unable to know. What about the minimum tax requirement for loss-making companies? 1.25% on turnover will still be applicable, Suleiman. Suleiman, what we are studying right now is only in case these requirements are met, and it is focused on traders. So anybody not falling within the purview of these changes, the existing laws would still be applicable on them. So if you do not fall, or if your client or employer for whom you are asking does not fall under the purview of these changes, then yes, the existing regime would still be applicable on them. Okay, thank you, thank you, thank you. You are welcome, welcome, welcome. What about the period between expiry and renewal? Salman Tariq has asked, what about the period between expiry and renewal? Well, Salman, the logical thing is what at least we do is that just before the expiry period, a short time, like couple of weeks or some time, we apply for the renewal. So I always advise that to the professional, that instead of waiting for their license to actually expire, or waiting for the exemption certificate, or even generally for anything, just waiting till the last deadline unless there is a very good reason. Don't wait. Apply in due time so that you can take advantage of the time period, the overlap. Um, okay. These are answered. Okay. I think I'll take a couple of more questions before going to the presentation. Okay. Hafiz Muhammad Faisal is saying down. Okay, I'm getting this question again and again, that handouts are not downloading on some of these systems. A link has been provided in the Q&A box, and it has been repeatedly provided by the organizers. Just have a look and please download it from the link. If you face any problem in the link, please let me know. The traders with revenue up to rupees 100 million are given exemptions to withholding tax regime under section 153. However, if the same trader is registered under the Sales Tax Act, is not given the exemption, isn't it a discrimination? Okay, Hafiz Suleiman. Well, Suleiman, any trader who is registered under sales tax would be able to fall under this regime. So you have to be registered under sales tax. You can't say I'm not going to get registered under the sales tax and this is a separate team, separate scheme I'll be registered under. It doesn't work like that. You have to be registered under sales tax. If you were not before, you would need to be registered now. And then if you meet these requirements, then you will be given the exemption. Now, as to the question whether this is a discrimination or not, different people would have different opinions. In my professional opinion, the decision makers are given the public trust to actually promote certain sectors. If they are not able to do that, they can't make any policies. For example, let's say now in this ongoing crisis, the government would definitely want to encourage people making medical supplies. If they introduce some incentives for this sector, it would definitely sound as discrimination to other sectors. But that is a positive discrimination. There can't be a discrimination other than to encourage or discourage a certain sector of economy. There can't be a discrimination uh, based on other factors between citizens, if you know what I mean. So no, I don't think that this is discrimination per se. This is just a way to incentivize a particular sector of the economy. Okay, Muhammad Ijaz has asked that FPR has asked ISCO, Islamabad Electric Supply Company, to charge 7.5% sales tax without considering last 12 months electricity bill and exclude businesses from tier 1 retailers. Does business still need to prove their bills despite ISCO has the data? Um, well, that's a very interesting question, Ejaz. The thing is that this 7.5% sales tax without considering last 12 months electricity bill and excluding from tier 1, if I remember correctly, that happened when that agitation was going on. And this ordinance was promulgated after that, once a sort of compromise was reached. So could you just check with ISCO again, what is the current status? I would advise to actually share and follow this ordinance, because that is actually the ongoing piece of legislation that is active on the ground. If there's any confusion after you check that, please touch base with me on LinkedIn. Murtaza is asking if we sell to unregistered, but okay, that has already been answered. So I think that brings us to the end of the questions. I'll take one last question of Zishan and then we'll go back to the presentation. Guys, I'm trying to answer as many of your relevant questions as I can, but as the time is limited, if any of your questions are left unanswered, please do not feel let down. You can still ask me those questions even after the end of the session. As I've repeatedly mentioned on various social media platforms, I would prefer LinkedIn for that purpose. Okay, so Zishan Jamil Sahab has asked, sir, as sales tax monthly statement filing has amended, like we have to submit. Okay, it must be has sales tax monthly statement filing been amended, like we have to submit the sales tax statement as per STR 28, but it is not available on FPR website. So how should we file it now? Zishan, we are about to discuss this point too, so just hold your horses. In the next couple of slides you'll be getting your answers. So we have answered all the relevant questions till now. Please write your questions in the question box, especially as we end a slide, so they can be answered without waiting in the relevant Q&A break. So coming back to the session, the main presentation now, supplies to unregistered persons. So I was actually discussing with you that you might remember, you must be able to recall actually, if you are a professional dealing in taxation, that previously we used to just pay the additional taxation, claim the input, but that has been changing for some time. The government has been trying to FPR more so is what we should say. FPR has been trying to discourage non-registered people. However, it's a catch-22 situation because many people are afraid, they have different reservation and prefer not to come within the tax ambit, which is unfortunate. So those people who are registered, they have to deal with various businesses. Some of them are not registered. So in that regard, FPR has introduced this particular change where a registered manufacturer shall make all taxable supplies to a person who has obtained registration under this act, which means Sales Tax Act, excluding supplies not exceeding a value of 100 million rupees in a financial year and 10 million rupees in a month, failing which the supplier shall not be entitled to claim credit, adjustment, or deduction of input tax as attributable to such excess supplies to an registered person. So what's happening here now? The natural course of action. The regulator is tightening the screw. It's limiting the sphere of how much business you can do with non-registered entities. So a registered manufacturer is now required to make all taxable supplies to a registered person only, but there is a provision. The good thing is that they haven't given a blanket ban. That would be really cumbersome for the businesses because we all know the state of the economy and the current state of compliance. But they have taken first step that now a manufacturer can only supply to non-registered businesses for a value of 100 million rupees in a financial year. So that comes up to 100 million mean 10 crore. Okay. So if a manufacturer is supplying more than 10 crore to an unregistered person, they would not be able to claim any input, not just that amount, any input. Okay, so they won't be able to claim any input, which would mean that would be the additional tax burden they'll be bearing if they want to deal with that person. So basically, it's a step taken to discourage people from dealing with non-registered entities and to try to bring people and incentivize them to come within the tax ambit. However, this has fallen short of a blanket ban, and I think this is the right step-by-step approach. But to actually have this enforced, we would need a revision of certain taxation laws, something that ACC and its taxation committee has long been advising. Reduction in subjective powers, certainly, reduction in perceived or actual harassment, reducing the interaction, the direct interaction of taxpayers with the officers, and more use of technology with some of the other steps that have been advised. If they are undertaken, then they, along with such steps, can achieve the desired results. Local supply of edible oil and vegetable ghee, including cooking oil on which federal excise duty is charged, levied, and collected in sales tax mode by a registered importer. Exemption shall not be available on local supplies by importer anymore. Meat and frozen, be it prepared or preserved sausages, and similar products of poultry, meat, and meat offal of all types, including poultry meat and fish, sold in retail packing under a brand name. Now pay attention, this is very interesting. Under a brand name or a trademark is subject to a reduced rate of sales tax at 8%. Other than in retail packing, such products sold under a brand name or trademark will remain exempt. So what does it mean? Anyone want to tell me before I explain this? Anyone? I'll be giving you 30 seconds to write your feedback. Wasi Hussain Kazmi is saying, sir, retail packing and without retail packing. Or okay, let me elaborate. What is the implication? Obviously, it's talking about retail packing and non-retail packing and meat, frozen, poultry, etc. But what is it implying? What is it signifying? What is the difference in the treatment? And that difference of treatment is doing what? You are all professionals. Think, apply your mind, and share. Okay, so Amara is saying meat shops having a brand name but not selling in retail packing. Uh-huh. And what about that, Amara? If you want to, you can elaborate a bit more. Ali Hassan Dar is giving the reference of the third schedule. Okay. Sufyan is saying KNN retail packing. Okay, guys, honestly, I do know what it means. I want to see whether you know it and then share your thoughts on it. So Sufyan is saying KNN retail packing. Okay, guys, Hello guys, can you hear me? Yeah, the webinar got stuck, but it's fine now, so we'll just continue now. Okay, guys, many of you have given the answers in the right direction, but only using keywords. Let me explain it for you guys, okay? So basically what it's doing is, number one, it has incentivized the meat and poultry by reducing the sales tax rate, number one. Secondly, it has given more relief to those who are coming in other than retail packaging. So that would be open meat or open poultry. They remain exempt. So it's basically incentivizing the smaller businesses, the SMEs, while still giving a relief to the retail packaging ones. The rate of sales tax on import of raw cotton and ginned cotton has now been increased to 10% from 5%. That would have implications. Well, our local cotton producers would certainly be happy on this. This brings us to the ninth schedule, the cellular mobile phones. You guys might remember that last year when these changes were hugely publicized about expat Pakistanis or otherwise travelers to Pakistan being allowed to bring limited number of phones, and then they can use it for a temporary period during their stay. If they actually wanted to gift it to someone or bring to the country, there were certain conditions and they actually had to pay the taxes, etc. So many people had many opinions about it then. Anyway, some reliefs have been introduced with regard to the sales tax. We are talking about the sales tax here. So the relief has been introduced with regard to sales tax on some cellular mobile categories, and it's been introduced by way of the ninth schedule to the Sales Tax Act. Relief is introduced by releasing the sales tax on import or local supplies and at the time of registration. So for any cell phone with a value not exceeding 30 US dollar, the previous sales tax was 135, now it's 130. 5 rupee relief, good, but not a material one. But the major relief comes in the other category. For any cell phones, and this is one of the largest use category by the middle class section of our society, value exceeding $30 but not exceeding $100. So previously it was taxed at 1320 rupees per unit. Now it would be taxed at only 200 rupees. So 1120 rupees differential. That is a major relief and in line with what people have been demanding. So that's a relief of almost 85% from the previous level. And it has also been announced that the other categories will also be rationalized. So hopefully that is something that should benefit the consumers. This brings us to the 10th schedule, sales tax on bricks. The requirement to file monthly return has been withdrawn only for those businesses dealing with bricks, not everyone. And PCT heading for bricks has been corrected. It's the Pakistan Customs heading. So it has been corrected from 6901.1000 to 6901.tetrao. This is to harmonize the categorization, the heading with reference to the Customs Act. There was a difference before, so now they have corrected that. And this brings us to the 12th schedule. But before I do the 12th schedule, I can take another quick question break for 5 to 10 minutes. So, okay, guys, let's do it. How are you feeling, Nizam? You want to help me with this?
Yes,
Do we have
sure.
Nizam there? Okay. So Nizam, you can start with this question at 5:30. Means KN start selling meat.
Um, okay. Mama Sheaf is asking if meat is not sold in pre-packet, then it is exempt. That's a
No,
statement.
no, you need to scroll to 5:30. There's a question by Muhammad
Amara?
Wasi Hussain Kasmi. It's before Amara's. So you need to scroll a bit up. It's at 5:30.
I have
It's
many questions.
immediately after
5:30.
my last query. It says
Okay,
means K and start selling meat on demand basis just like any other butchers. I'm going to answer this question. Meanwhile, you try to locate it. So Muhammad Wasi Hussain Kazmi Sahab has asked, does this mean that can start selling meat on demand basis just like other butchers? Well, they can if they decide to, but business decisions can't be taken just on the basis of tax exemptions. Brand has a value. Mean the price that KN is charging you is based on the demand value, right? If they are to take out the brand, their demand might actually drop, and plus whether they would be able to charge that premium price would be another question. Okay, Nizam, have you located that?
I appear to have. Okay, so a question by Taha Askari. A Karina meat shop seems to be exempted. However, a retail packing company such as KNN will have a tax applied to them. And then we
This
have
was
Ali
this was their comment. This was the comment. You know what? You come to Amara's question. Okay, I'll answer the two questions before that, and then you can continue with Amara's question. Okay.
Fine.
So Muhammad Ahmed Khan has asked, meat and oils used for making finished products by a restaurant is also exempt. Not relevant to today's session. It's not covered in the ordinance, but I'll give you a hint, Sales Tax Act. Ali Heather has asked, retail packaging is unavailable to customers, but the same company can be supplying to restaurants in non-retail packaging. Yes, a company can be supplying to restaurants in non-retail packaging. You are right about that, but you have to look at the context that we are talking. We are talking about the products sold other than brand name. I'm not aware of any brand that supplies to public in a brand name and to wholesale consumers in non-branded. But if there is such a case, then certainly it can be analyzed. And the last question before I hand over to you for asking the questions is, well, it's actually a comment, so that's fine. Okay, onward to you, Nizam. Please ask the questions now.
this allowance applies to whole amount or amount exceeding the defined limit for unregistered persons such that 100 million in a financial period.
Okay, so Syed Umair Akhtar, you have asked a very good question. Does input tax disallowance applies to whole amount or amount exceeding the defined limit? I've already answered that, the whole amount. Next one.
Okay, Amara Sheikh, my question is regarding mobile phones. The sale tax is in addition to the income tax payable under income tax ordinance. I cannot recall the exact schedule in income tax ordinance, but I have seen it there. And in practice, I have received complaints from various individuals who claim that custom authorities determine the tax payable at the airport there and then. So what is actually happening regarding these mobile?
Yeah, Amara, it's quite a hot topic. Unfortunately, we have limited time today, but I will try to address that. You can send me a message on LinkedIn. I'll reply you there, or you can also call me up directly. I think you have my number too. But briefly speaking, yes, the custom authorities determine the value of the cell phone. Obviously they have to assess that. So for example, somebody bringing an iPhone and declaring it for 30 US dollar, that's not gonna work. The custom authorities would definitely say, no, this is not worth 30 US dollar. But once that value is assessed, which is the legal right of the custom authorities to actually assess the value, that can be challenged, by the way. Any value that the custom authorities assess, any taxpayer has the right to challenge that. just so you are aware and you can advise others too. But once that value is assessed, then on the basis of that assessed value, the tax is then charged. Hope that answers your question. Next one.
Mohammad Wasi Hussain points out you have not discussed the 11th schedule.
We haven't even discussed 10th schedule yet, Hussain. You have to bear with me, my friend. I've told you it might be coming on the next slide, but let me just show you so you can be certain that we are about to discuss it. Here you go. We have the 10th schedule, we have the 12th schedule, we have some penalties. So don't worry, we'll be covering all the key areas, and anything that is left, you are given the ordinance to go through it. And after reading that, any main queries that you have, you can contact me, as I've repeatedly said, even after this session. Remember this, I did an entire day session on this ordinance, okay? And we have 2 hours to cover the key areas. It is not possible to cover each and every clause in detail. So we had to pick and choose the areas that we thought were the most important and should be discussed and apprised, and anything that is left, if you deem that is important, that is the very reason that we have provided you with the original ordinance, and even with this facility that you can contact me after this session too. Hope that answers. Next one.
Mohammad Ahmed Khan is asking meat and oils used for making finished product by restaurants.
Not relevant. Next one.
Are they also exempt? Okay. Elias Anis is asking, what about supplies to unregistered persons by registered non-manufacturer? Does that limit still apply?
Yes, the one we have just discussed. Next one.
Would the sales tax value be applicable on MRP or the amount actually paid in case there's a discount? Mohammad Ali Khan.
MRP. Next one.
Wasi Khan is asking, can you please briefly discuss regarding PCT heading?
I think he asked that before I discussed it. Wasi, I have already discussed that about the heading being changed to be in accordance with the Pakistan Customs heading. These products have these headings in the Customs Act, and then as per the custom legislation, that is basically tied with the classification in the other laws. So that has to be in harmonization. Hope that helps. Next one.
Mazhar is asking, is the sale tax claimable on invoices of maintenance company maintained cars?
No,
Company
because you
maintained
are the end
cars.
consumer there. Next one. Unless obviously you have a business where your input is getting the car repairs, which doesn't seem to be the case from the question. So no, not in your case. Next one. Azam, are you
Packaging,
there?
then a company can easily operate without. Yes,
Go
I'm
ahead. I
speaking.
can hear you now.
Can you hear me? If tax is only on retail packaging, then a company can easily operate without retail package to save tax? Question mark.
Yeah, Muteeb, I've already answered that. Let me do it again. Muteeb, let's think about it logically. How much tax would you save on it? 8%? Okay. Material amount. What are you charging for it? Maybe as a brand, you are charging 20% premium. So would you lose 20% premium to save 8%? Doesn't make business sense, does it? Secondly, you might have a large client base that is only buying because of the perceived value of your brand. If you take that brand away, would they still buy from you? Might not. So losing all those customers, losing that business, and losing the premium that you are able to charge would make you think twice before doing that. But yeah, theoretically you can. I hope that answers the question. Next one.
Bear is asking, it seems that only registered businesses will be affected by this regime. Kindly elaborate what impact will it have on the cottage industries related to it? I mean the total value chain specifically for the local products.
Well, Not exactly, Ali. It's not just the registered. I mean, if you look at the clause that we just discussed about the manufacturer being restrained from selling to unregistered, etc., so it would be having an impact on the entire supply chain. I'd agree less so on the cottage industry, and perhaps one of the reason not to tickle a lot with the cottage industry is that the government want to promote them. If you remember last year, there were a few changes where the cottage industry's limits were revised. ACC actually championed that, and it was one of our proposals that were accepted too. So yeah, it's not just basically for the registered, although it directly impacts the registered businesses, but certainly it would have impact on the supply chain. Next one.
Rashid is asking 100 million supplies to unregistered persons. Input or output will not be allowed. And how, for example,
Rashid, that has already
when a
been
manufacturer
answered,
will make
and
supplies, it will be his.
it's okay, Nizam. That question has already been answered, Rashid. I hope you have got your answer. Amin, yes, the recording will be available. Nizam, will we be sending out an email of the recording link, or how does it work now?
Everyone will be receiving an email on this session. The recording and the handouts all will be in that particular email.
Perfect. So as my colleague has just shared with you, Nizam has informed you, everyone, please pay attention because many members have been asking this repeatedly. Yes, the recording will become available. You would receive an email with your participation certificate and a link to the recording. Okay. Next one, please.
Software company registered in SRB can claim input monthly return on cellular companies, internet service provider, and electric.
Prem Kumar, you need to elaborate your question. I'm not sure if you are making a statement or want to clarify. Please write again your question properly and we'll be happy to answer. Next one, please.
Okay, Taha is asking, can a digital platform have an unregistered person, especially if that unregistered person is a new business to sell its product on its platform? Does this amendment apply?
Yes, it does mean if you have an unregistered person selling on your platform, it is actually in breach of the law, especially if they fulfill all the other requirements to be registered. Normally, I believe if somebody is just starting to sell out, they might not fall within the mandatory registration requirement, but you'd need to check that. Secondly, if there's someone who falls within the mandatory registration requirement and you allow them to trade on your platform without registration, hypothetically speaking, there would be two implications. Number one, the tax authorities can, as per law, go after that person. Second, they can also go after you because you are actually aiding in the breach of the law. Next one. And this would be the last one. Then we'll just finish off a couple of slides. And in the last few minutes, if we have time left, we'll answer more questions.
Okay, Abdul Ghani is asking, kindly guide if a brand selling to any restaurant or marriage hall in bulk. Understand bulk supplies cannot be made on retail pacing.
Basis.
I think he
Okay.
retail prices. Can a brand take a position and fall under exempt from sales tax at 8%?
You have to fulfill all the other criteria. If you fulfill all the other criteria and you are not providing it in any retail packaging, the word is not just brand name, it's the retail packaging. So that is the important thing. Whether the marriage hall or restaurants would be happy to get your supplies without the packaging. Focus on that too. But yeah, theoretically speaking, if you don't contravene any other condition, if there is a business case for it, and if your customers are happy to get it without the packaging, sure, there's nothing limiting you there. But there are quite a few ifs to work out. Don't you think so, Abdul Ghani? Okay, let's go back and finish off the presentation because we have last 11 minutes remaining. So far, so good, guys. Let's finish it off. So the 12th schedule, it deals with the 3% ad valorem value addition tax. that shall not be charged on plant, machinery and equipment falling in Chapter 84 and 85 of the first schedule of the Customs Act 1969 when imported by a manufacturer for in-house installation or use. This is in line with some of the policies to promote the manufacturer and to actually incentivize them to enhance their capacities or upgrade their equipment, plant, and machinery. Refund of excess input tax over output tax attributed to the minimum value addition tax paid under 12th schedule has now been allowed to registered person in case items imported are used for making zero rated supplies. Previously, this was not allowed. So, agar zero rating supplies, even if you are manufacturing the zero rated supplies, you can still get the refund now. Penalties have been inserted. We'll just go through these penalties. These are for four specific cases of non-compliance. If there are any of these non-compliance, you'll actually face these penalties. So let's see that. Number one is any person who is integrated for monitoring, tracking, reporting, or recording of sale, production, and similar business transaction with the board or its computerized system, conduct such transaction in a manner to avoid monitoring, tracking, reporting, or recording of such transaction, or issues an invoice which does not carry the prescribed invoice number or barcode, or bears duplicate invoice number or counterfeit barcode, or any person who abets commissioning of such offense. So पहला सिनेरियो क्या है, आप रजिस्टर्ड हैं एज अ ट्रेडर, एज अ टियर 1, लेकिन आप कंप्लाई नहीं कर रहे रिक्वायरमेंट से. उस केस में क्या होगा, और ये बेसिकली सब सेक्शन 9A ऑफ सेक्शन 3 और सेक्शन 40C के तहत अप्लाई होगा. सच पर्सन शेल पे अ पेनल्टी ऑफ 500,000 rupees or 200% of the tax amount involved, whichever is higher. So what it means, if the tax amount involved is, let's say, 1 million, then you'll pay 2 million penalty. Okay. He shall further be liable upon conviction, but that's not all. There can still be conviction by a special judge to simple imprisonment for a term which may just extend to 2 years, or with additional fine which may extend to 2 million rupees. Remember, this is additional fine, not replacement fine. So you might still have to pay 500,000 or 200% of tax amount. One may have to visit the jail and pay additional penalty of 2 million or both. Any person who abets commissioning of such offense would also be, upon conviction by special judge, liable to simple imprisonment for a term which may extend to 1 year, or with additional fine which may extend to 200,000 rupees or both. So the abettor can also go to jail, not just the trader. The second scenario is a person who is actually required to integrate with the board but fails to get himself registered. So the first scenario was that a person is registered but is not complying or is trying to deceive. The second scenario is the person is not registered at all. So this falls within the purview of subsection 9A of section 3 and section 40C, and such person shall be liable to pay a penalty of up to 1 million rupees. It's up to, not 1 million, so can be any amount. And if continues to commit the same offense after a period of 6 months, if the person is still not registered after 6 months, after imposition of the penalty, as aforesaid, his business premises shall be sealed and embargo placed on his sale. He won't not be allowed to do the business anymore. And remember, this penalty is not one off. I mean, if you are not registered for 1 month, you can't say, okay, now I won't be registered for 6 months, save the sales tax, and then get registered in 6 months. If the FPR actually pursues you again in the second month, there is nothing stopping them from actually ensuring that they levy the penalty on you once again. So you might be paying 1 million, then 1 million for 6 months. So it doesn't make sense. Better to comply. Number 3, any person being a manufacturer or importer of an item which is subject to tax on the basis of retail price, who fails to print the retail price in the manner as stipulated under the act, would have to pay a penalty of 10,000 rupees or 5% of the amount of the tax involved. Further, don't just think yet that the penalty is low. Just wait and see. Further, such goods shall also be liable to confiscation. There you go. The goods can be confiscated too. However, the adjudication authority after such confiscation may allow, is not required to allow, but can allow. They may allow redemption of such goods on payment of fine which shall not be less than 20% of the total retail price of such good, and this would be additional to what we have discussed. And last but not the least, the fourth scenario is any person being owner of the goods which are brought to Pakistan in violation of Section 40D. So if there is a violation, then such person shall pay a penalty of 10,000 rupees or 5% of the amount of tax involved, whichever is higher. Further, such goods shall also be liable to confiscation. However, the adjudication authority after confiscation, again, the keyword is may, is not required. It's up to their own will whether they want to allow or not. They can allow after hearing and after confiscation the redemption on payment which shall not be less than 20% of the value of retail price, not the wholesale price, not the purchase price, the retail price, in case of items falling in the third schedule of such goods. So that brings us pretty much to the end of it. The Customs Act changes were not within the scope of it, but they are covered in the original ordinance that has been shared with you. Go through that. If you have any questions, please feel free to contact me. Feel free to contact us. Let us know how the session was. Let us know any other topics you think would add value for you, would be of interest to you. Uh, as I promised, my contact details are shared. Please do not abuse them. If you do decide to message me on WhatsApp, introduce yourself briefly, add a professional intro and your question. The best way to reach me is on LinkedIn. You can search me on LinkedIn using my name that is right in front of you. They are my other social media and email handles, but the response time on them is greater. I try to strive and make an effort to respond to everyone, but obviously there are other commitments, so it might take a bit of time, but I will respond to you. Let us know whether you think 2 hours is sufficient or we need to extend the time. Let us know any other topics that you believe can deliver value to you. You can send me an email directly about that. You can share your feedback on LinkedIn. You can send an email directly to Member Affairs with regard to that. We hope this session added value to you and you are now aware of the key changes that have been made through this second amendment tax ordinance, and we wish you all the best. I would like to thank the entire ACCA team, especially Nizam, who has supported me in conducting this session. Thank you, Nizam, on behalf of all the members for your efforts. By the way, Nizam is himself an
Most
ACCA
welcome, sir.
student, and hopefully he'll be a member soon too, inshallah. Great. And guys, keep your comments coming. Unfortunately, we have very less time left, so I would try to still cover some question or two that I can. I can see many of you, Nabil, Osman, Atik, etc., are thanking. You are mentioning that the times should be reconsidered. Sure, your valuable feedback is important to us, as I've already shared. Please do send us emails, send emails to Member Affairs, send messages or to LinkedIn, whatever is more convenient to you. And inshallah, we'll discuss and try to revise the time if you think it should be more. Wasi Hussain Kazmi is saying, please provide me some links of previous taxation sessions conducted by Sir Umar. Uh, Mr. Kazmi, when you'll receive the email for this session, the link that you'll have would have other sessions too. However, if you are more of a YouTube guy, you can go and search my name there. There is my channel active by my name on YouTube, and it also has recordings of pretty much all these sessions. So I hope that should be helpful. Thank you guys for your time. Please take care of yourself. Stay at home unless you have to go out for some important work. If you do have to go out, please take all the necessary precautions. Stay safe, spread the message, and use this time to develop yourself professionally. Thank you very much. Have a good day and have a very fine evening. Goodbye. Allah Hafiz.